U.S. stock markets are officially open for trade. Joining me now is Rahul Sharma. He's the portfolio manager of the Cullen Emerging Markets Dividend Fund and Cullen International Dividend Fund. Welcome to the show.
Hi, thanks for having me.
So what are you following most closely as we start today's session?
Well, we're just kind of watching, sort of trends. I think the big event is the upcoming meeting between President Trump and Xi Jinping. I think there's a lot of hope that we'll get a trade resolution. For me, that's the big thing.
All right, and given your focus on international and emerging markets, what is driving the positive performances so far this year?
Well, I think certainly the weakening dollar has been a big thing. There's a very strong correlation between both international and developed market equities, like indices like EFA, and also emerging market equities. And so, we've seen the biggest decline in the dollar that we've seen in the last 50 years. And so, unsurprisingly, you're seeing non-U.S. equities performing well. In the places like Europe and international developed markets, there's a lot of hope on these spending plans that are coming out. Big plans for spending on defense and infrastructure, which is quite wide in scope. So that's something new in Europe, and it's something that people are hopeful can translate into earnings growth. In emerging markets, you're seeing a lot of reform-related catalysts in markets like Asia, improvements in corporate governance. And kind of like the U.S., there's a lot of emerging market countries that are also benefiting from these huge demand trends we're seeing coming out of AI. And then finally, valuations are still quite supportive. These stocks are far cheaper than U.S. equities, and I think people are starting to take notice of that, and also for the need to diversify away a bit from the U.S.
All right, and what strategies are you using when aligning your funds and giving investors certain amounts of exposure?
We primarily have two strategies that I manage. One is our international high dividend strategy, which is more of a developed market strategy. And then, as you mentioned, the emerging market strategy, which is a direct play on emerging markets. And, we tend to have a pretty pure definition of both. So in the developed market strategy, we're investing in most EFA countries, although we do have a little bit of EM exposure. In emerging markets, we invest in what's defined as the MSCI emerging market countries, as well as certain frontier markets.
All right, and do you see more upside in those non-U.S. markets, and why?
I do. I think all those factors that I mentioned are in place. The spending plans in Europe are just beginning. The valuations remain very attractive. Emerging markets have several things I think going from them. There's always kind of that inherent potential of the consumer in emerging markets. They're very well positioned for AI. It's a great place to play AI demand trends. And if you just look at the kind of historical precedent in terms of the duration and magnitude of past periods of outperformance of international equities or non-U.S. equities, it speaks to the fact that we should still be in the early innings. I don't know if we have time to go through the numbers, but I would estimate that based on historical precedent, we're probably about 25% through. So for investors that think they've missed it, I don't think that's the case at all. And I think people probably aren't aware of just how kind of out of favor and oversold and for how long these markets have been.
All right, and for those who are new to investing in emerging markets, what would you advise them about it right now?
Well, our belief has always been if you're going to invest in a more volatile asset class, why not take a less volatile approach? And so with our dividend approach, that's exactly what we do. We also look at a lot of quality factors, things like corporate governance. That's very, very important. There's a lot of kind of little, kind of areas that you can get kind of in trouble if you're not watching those sorts of things. Demanding earnings growth, paying attention to valuations. Those are all things that we recommend when investing in emerging markets.
Is there anything else you're following now, Rahul?
Well, there's always so many things going on. AI is a big one. Emerging markets are a great place to play technology supply chains or tech megatrends through the supply chains in places like Taiwan and South Korea. So just as people are getting a little concerned that there's so much spending going on, we have to keep our eye on that. I mentioned there's a lot of reforms going on and hopes for more of that. In terms of in places like South Korea or even in China, where companies are really paying a lot more attention to things like corporate governance. We're all hopeful that all these terrible wars will end. We think that can only be a good thing. And then, I think it's good, just some certainty on the whole trade situation and with the tariffs. the big elephant in the room being China. Hopefully it'll be better than anticipated, but just getting some sort of, kind of conclusion on it, I think will be very hopeful. That's what we've seen in other markets where we've seen that, like say Japan or South Korea.
All right, thanks, Rahul Sharma, portfolio manager of the Cullen Emerging Markets Dividend Fund and Cullen International Dividend Fund. Thanks for joining us.
Great, thanks, bye-bye.